Hey everybody, it's your favorite Columbus realtor, CJ Churchill, here to make real estate easy for you. Today we have a pretty big topic, going over something that has been pretty controversial. It's the 50-year mortgage. Today we're talking about a mortgage option that sounds great on paper, but could actually hurt buyers in a big way, the 50-year mortgage. I know, it's being marketed as more affordable, but when you actually look at the math and the long-term impact, it becomes clear. The 50-year mortgage is one of the worst ideas for buyers in today's market. Let me show you why. Let's talk about the myth of lower payments. The first thing some lenders will pitch is, your payment is lower, so it's more affordable. But here's the truth, the difference is usually tiny. Let's take a realistic Columbus example. A $350,000 home at 6.5 rate. Roughly your mortgage payment on a 30-year mortgage is about $2,200. On a 50-year mortgage, it's about $2,000. It's really a net difference of about $180 to $200 per month. But here's the kicker. Over time, you will pay even hundreds of thousands more in interest. Not thousands, hundreds of thousands. And worst of all, that small monthly savings comes with a massive long-term cost. Secondly, let's now talk about the front-end interest trap. In a 50-year loan, the first 15 to 20 years, 15 to 20 years are almost entirely interest. You barely touch the principal. So if you buy a $350,000 home and you plan to move in 7 to 10 years, which is the average, you walk away with very little equity growth off the payoff principal. And here in Columbus, where appreciation is solid, your equity is one of the biggest wealth builders, a 50-year mortgage slows that down dramatically. Something else to consider, it can hurt the entire market. Here's the part that nobody is talking about. If we make it easier for buyers to stretch further, artificially, it doesn't make homes more affordable. It pushes prices even higher, especially in a competitive marketplace like Columbus. So a loan product advertised as affordable actually pushes prices up, reduces buyer equity, increases long-term debt, and makes the whole affordability problem worse. That's not a solution. It's a band-aid with long-term consequences. So here's the thing, there is a hidden risk. You're paying more for less. So let's break it down. You're paying more interest, you have more total cost, and you have more years of debt for a payment difference of less than $200 a month on average. And here's the biggest problem. Most buyers don't stay in their homes for 50 years, not even 20. So most people will never see the benefit of an extended term, but they'll still pay the price, literally. All right, now, so you might have the question, what should I do instead? If you're trying to make home ownership affordable, here are solutions that may actually work. You want to compare payment options, compare a 30-year to a 15-year, or even looking at a possible rate buy down. Sometimes a small buy down saves you more than stretching out the term. Explore local and state grants here in Ohio. There are a lot of down payment assistance programs, and some of these programs don't need to be paid back in the form of a grant. Get a personalized affordability plan. Your income, your debt, your credit, and timeline all matter, not just the payment. A longer loan term shouldn't be your first strategy. It should be your last. And usually, not at all. Hey, I know, affordability is a real concern, but the 50-year mortgage isn't the answer. And I don't want to see any buyers pay more than they need to, whether they're working with me or not. If you want a personalized breakdown for your situation, what your payment options would look like, what programs you could possibly qualify for, and how to buy smart in this marketplace, just DM me the word plan. I'll walk you through every step, and I hope today I've made real estate easy for you. Looking forward to talking to you soon.